It seems Cathie Wood knows the best way to become rich. Renowned for her audacious investment approaches, all aimed at disruptor firms, Cathie Wood and her business ARK Invest have identified the top 3 stocks to buy this year. Despite the fact that daylight savings time cost us an hour over the weekend, Cathie Wood isn't squandering any time. The CEO, co-founder of ARK Invest, and expert stock picker believes that this year's market is favorable and that she has chosen some excellent stocks. Which are the stocks that Cathie Wood suggested? Number 1 is Coinbase. I mean, all of you must be familiar with Coinbase. After all, blockchains and cryptocurrencies are unlike any other technology in that they embody the essential qualities that Wood and her organization want, such as innovation and disruption. And ARK Invest is a strong advocate of Bitcoin, the most valued cryptocurrency globally. But according to Morningstar, Coinbase is the company's largest position. Though cryptocurrency is gaining traction for another bull market, investing in Coinbase may be a good chance at the right time. However, what appeals most is the long-term potential. The last few years have seen a significant change at Coinbase. Transaction fees are used to account for more than 90% of the company's income. These days, though, it has a diverse revenue source that appeals to both institutional and retail investors. These days, transaction fees only make up roughly 55% of total income. Coinbase has launched its blockchain and is currently pursuing an international expansion strategy. Most recently released spot Bitcoin exchange-traded funds rely on the company for essential services. It's generating revenue in almost every manner conceivable. Number 2 is Robinhood. Anybody dealing with finance will know Robinhood the most. Robinhood is emerging as the go-to platform for everything financial, while Coinbase has emerged as the leading hub for all things cryptocurrency. The company's first product was an app designed to make investing easier, but in the last year, it has greatly increased the range of products it offers. I mean, these days, Robinhood provides savings accounts, subscription plans, individual retirement accounts with a 3% match for Robinhood Gold customers, and even brand new credit cards with 3% cashback on every transaction. Users can exchange a few different cryptocurrencies with it as well. In addition to looking into new revenue streams and building customer loyalty, Robinhood can increase revenue per user by charging interest on customer cash and margin loans when it has fewer customers but more assets on its platform. This tactical edge fortifies the platform's resiliency, long-term growth potential, and financial standing. Best of all, Robinhood's easy-to-use software might end up being the de facto standard for anyone wishing to delve further into Wall Street and improve their financial skills as younger generations approach investing age. Number 3 is Nvidia. The most valuable of the 3 stocks Cathie suggested is Nvidia. Nvidia's chips are now used in self-driving cars, enterprise AI models, and the industrial metaverse. In addition to their original use in video games, the company is currently trying to take advantage of cloud-based generative AI. The shift in Nvidia's role from video game accelerator to industrial metaverse and artificial intelligence facilitator took some time, but the company's stock market worth increased to over $1 trillion. It was at this point that Nvidia's stock market valuation shot through the roof, propelling it into the exclusive trillion-dollar club alongside well-known tech giants Alphabet, Amazon, Apple, and Microsoft. The company had reported strong results for the 3 months ending April 30, 2023, and had projected that its sales could jump by 50% in the following fiscal quarter. The one niche chip company was becoming a Wall Street favorite and was well known across the country. In mid-June, investment bank Morgan Stanley predicted that Nvidia's valuation may increase by an additional 15% before the year ends. By the end of August, Nvidia had more than lived up to its earlier optimism, having reported an 88% quarter-over-quarter increase in revenue for the 3 months ending on July 30th. This growth was fueled by record sales of data center products, which totaled over $10 billion, with strong demand coming from Oracle, Microsoft, Google, AWS, and Meta. Its stock price has also kept rising, approaching the $500 mark predicted by Morgan Stanley. There are many factors responsible for these companies' high valuations, and some of them are quite well known among analysts. What are enabling these factors of these 3 companies? In their nations, the trillion-dollar corporations have developed into centers of innovation. They actively search the European, US, and global markets for intellectual property to add to their collection. And they have sizable R&D labs. These two titans frequently purchase rapidly expanding tech startups in Europe, even if the acquired technology is never put to use. Anticipating the demands of the two tech giants is becoming a bigger emphasis of tech R&D in institutions across the US. Though unevenly distributed, the amount of capital is at historical highs, with virtually limitless funds at their disposal. The two digital giants can finance their research, make investments to upend adjacent industries, and follow an aggressive M&A strategy that sees them making an average of one acquisition every week. Money has entered the market to find and invest in businesses that the two internet behemoths could want to buy in the future. In their home nations, the trillion-dollar corporations have significantly boosted economic activity. Their employees pay the greatest income tax per person for a corporation of their size. They dominate national stock markets, and they are significant donors to charities and the arts. The majority of political leaders applaud the internet giants in public, but in private, they feel diminished by their increasing influence and power, especially when it comes to subsidies. Nvidia is the talk of Wall Street, and everyone wants to own a share of their company. But how did Nvidia get here, and where are they headed next? How is Nvidia able to attain this valuation? If you notice, Nvidia has less consumer brand awareness to go on than most of its trillion-dollar tech peers, which makes its Wall Street debut more enigmatic to Main Street. This narrative is mostly due to the growing significance of specialty chips in the corporate world and the growing interest in the potential of generative AI. In 1993, Nvidia was a fabless semiconductor company that created graphics accelerator chips for personal computers. Its creators saw that the production of 3D visuals for video games, a rapidly expanding business at the time, put a heavy mathematical and repetitive burden on PC's central processing units. The initial Nvidia GeForce graphics cards were made possible all by the realization that those calculations could be completed more quickly in parallel by a separate chip than in series by the CPU. For many years, Nvidia's businesses was centered around graphics. Even now, after 30 years, it's still the largest supplier of discrete graphics cards worldwide. Because of sales of gaming graphics cards such as the GeForce series. Other applications for Nvidia's GPU's parallel processing power have developed over time, resolving issues with matrix arithmetic structures resembling those of 3D graphics modeling. Nevertheless, in order to use graphics chips for non-graphical applications, software writers had to organize their calculations so that the GPU could receive them as a set of instructions for the open-source OpenGL or Microsoft's DirectX graphics API. If you are a trader, there are lots of options in different sectors where you can invest your money. Do you think metaverse, AI, and cryptocurrency mining are the way forward for future investments? The necessity to execute billions of repetitive calculations in order to train machine learning models has been one of the main factors driving demand for Nvidia's chips. OpenAI's GPT-4 model is claimed to have around 1 trillion parameters, making it one of those incredibly large models. In order to speed up the training of the large language models that OpenAI was creating, Nvidia even created a unique compute model based on its H100 processors. Are you an investor in any of these companies? Do you believe that these stocks will enable us to become millionaires as Cathie Wood predicted? Do share your thoughts on this in the comments section. For more interesting stories and updates, subscribe to our channel. And don't forget to press the bell icon for notifications. Goodbye.